Hey, this week's going to be an interesting week with interest rates. We have the Fed meeting, and on Wednesday afternoon, they're going to come out with their expectations on what's moving um, ahead here. And if you've been paying attention, we've seen a battle between President Trump and the Secretary of the Fed. So we'll see how he handles those comments. Previously, I think it was expected that the Fed would remain rates unchanged. Trump has been calling for the chair Powell to lower rates ahead of all of the data, um, rather than waiting for the data to come out, which is what Powell has been doing. Personally, I have found Powell to be as nonpartisan as any Fed chair that I've ever seen. Whether or not I'm right, we'll see. But certainly, we'll see how he responds to bullying. Um, Either way, I think Trump has backed off on the bullying and kind of gotten back to saying, things in a gentler way recently. I think maybe because he realized he was a bit over the top in some of those comments. However, we'll see. I don't know that the president's influence interest rates as much as they influence everything else. The Fed is supposed to be an independent party. It's supposed to be a nonpartisan party. It's supposed to be, really in charge of controlling the economy, making sure it doesn't get out of hand one way or the other. Now, it doesn't have a history of necessarily doing so, as many of us remember multiple times. And I think that's why Chair Powell has had the stance that let's wait and see and then react rather than be proactive, which is what Trump is asking for. Personally, I think a little proactivity on the part of the Fed would be useful. I think, obviously transactions have stalled due to the higher interest rates, and interest rates are probably, in that like high six, low seven arena for most folks who are buying a home today. And that's still very, very painful place to be for most people who might have a 3% currently. So, they're doubling their payment just to get an extra bedroom and bathroom. They say, you know what, forget it. And there goes a bunch of different sales that would have happened if rates were in the mid five range, which I think would be a healthy place for our economy right now. So we'll see how it goes. Wednesday, stay tuned. Market volatility is still here. I probably would expect it to continue, although it's not quite as bad as it was. Hopefully Fed comes out, says, we'll lower rates a little sooner than expected. That'll be helpful for mortgage rates, although we're still looking for higher treasury, activity. If, we do have some bond auctions coming up, those are also very, very much a part of what is driving mortgage interest rates. And so we do need the confidence in the US dollar, confidence in US treasuries. And so hopefully, we're going to see it. It's going to happen. I think there are a lot of moves that are going to be, causing that to happen. Whether or not it's now or 6 or 12 months from now is to be seen. So hopefully this helps you. Either way, we are here to help get things done. And let us know if there's anything that we can do for you or any material we can provide to help you and your clients. All right, take care.